welcome to FinextraTV. I'm Hannah Wallace, and we're here at Merchants Payments Ecosystem 2022 in Berlin. With me now in the MasterCard Press Lounge is Sarah Tal from Rapid. So it's great to see you again. Thank you very much for joining us.
Thank you for hosting me here after, I think it's like 2 and something years since we've last been sitting on the same sofas in the same location.
That's right, it has been a long time, and that's really where I want to start. I want to get an update from you, a bit about Rapid's business and your ascent from the original foundation story to now your global scale. So let's start there.
Okay, it's an interesting start. It's also an interesting story and a good introduction into the current Rapid story. Rapid actually started as Cash Dash, which was a consumer-facing multi-currency wallet. That the idea behind Cash Dash was to enable global travelers to hold funds in multiple multi-currency accounts and use these as needed in the different countries without having to go through the expensive FX processes. We launched in the UK, we had the app running, we had the integration into the local payment methods, into the local ATM system where you can cash out in British pounds. We got a license. It took us like 9 months to get this set up in the UK. We finally launched and we said, okay, this is building up nicely. Now we want to expand into additional countries. We turn around and we say, turning this on in another country is another 6 to 9 months journey. You need to get integrated into the local partners, you need a local regulation and so on. All our technology stack was built on Amazon AWS, which you can scale globally as needed. So we looked around and we said there must be a platform in the fintech world that will support our global expansion. We started digging and looking and asking, going to conferences and nothing. And this is where we've realized that the greater opportunity lies to build a platform, a fintech platform that will enable third parties that need to scale globally, build their business on top, which is a combination of a technical API platform and financial regulations that enables us to enable our customers to collect funds, hold funds, and disperse funds on a global basis. So this is kind of a short run into the history of Rapid and where we are to today.
No, brilliant. Thank you very much for bringing us up to date. You've just certainly had your work cut out for you then. So thank you very much for that. And I know we wanted to talk a bit about embedded finance and what that means for merchants. Obviously a really big topic at this year's MPE. So could you expand on that for us?
Yep, I think in many cases, and here as well, people are using the same terms to describe different things, and I will share with you my view or the Rapid view of the embedded fintech or the fintech as a service. And I think this comes from the conversion of two trends in the fintech space. One, if you look historically at the fintech space, and it is pretty much the situation today, you're seeing many, I would say, silo service providers, somebody who's card acquirer, card issuer, open banking, risk management, compliance, FX services. And most of them do this, on a country level, sometimes on a regional level. Now imagine you are a global business and you need to consume these services not only in one country, but in multiple countries. You all of a sudden need to integrate into a very large number of providers to enable these services. And this is where what I would call the embedded, or Rapid calls the embedded services, where we enable our customers to integrate to the fintech world through one API, one agreement, one reconciliation file, and move your funds on a global basis. So instead of having to integrate to multiple service providers in each country and then duplicate this into other countries, you can do it through one provider. This is one trend in the business. The other trends that converges into the same need, into the same problem, is I would say the service platforms. We are seeing today many businesses that provide services to other businesses, logistics services where you can book a truck or an airplane to send your packages, ordering systems for restaurants, booking systems for spas and whatever, all the way to payroll, global payroll providers. They built a system, they have their customers, they provide them the service, but the money flow is not through their platform because they're not regulated. They cannot touch the money. So not only they're losing visibility and their customers need to manage the funds flow in a different system, they're also limited to their ability to generate revenue from their customers, because you can only charge your customer a platform fee. A couple of €1,000 a month if they're very big. A couple of euros per account. It's very limited. Finally, these providers have realized that if they move into the funds flow, they can solve these two problems. One, they can now make money out of flow of the funds, and two, they provide more visibility for their customers. So the level of service that they offer their customers is much greater. So now instead of this customer managing the payroll on one system, and then they tell them, okay, you need to send €1,000 to this destination, they need to go to their bank, upload that data and send the money, they can now do it all in one system. So these two forces converge into what I would call the embedded fintech, which is a combination, again, of an API, platform, and financial regulations.
All right, that's really interesting. Thank you very much for clarifying that, and some helpful examples there as well. And like I said at the beginning, it has been over 2 years since we last spoke, and that's because of COVID. So I want to hear a bit about the impact COVID has had on the introduction and the rollout of embedded fintech services. What did we see here?
What we've seen in the market is again, more business moved online. Physical locations were closed. People had to go and make their purchases online. And when you started spending more time on purchasing online, you finally, as a consumer, found out that there are providers not only in your country, in your language, in your territory, that can offer you these products or services, but you can actually buy something from somebody in the other side of the world. And on the flip side, the merchants all of a sudden realized, hey, I am seeing a growth in my international or non-local customers, which means you had to adapt your fintech infrastructure to support this global audience all of a sudden, in terms of enabling them to accept, to pay in their local payment methods, in local currencies and so on. This drove the logistics business and the supply chain management business, which now had to deal with global payments. So it's not only the front end that required a global solution, it's also the back end of the business that you now had to pay your suppliers on a global basis. So providing these customers the ability to better serve their customers and improve their acceptance rates and lower their costs on the acceptance side, but also to use the funds collected in these specific countries and currencies to pay out to suppliers in the country. So it's kind of a double dipping into the optimization process. One on the front end and two on the back end of their business, the B2B side of the business.
Yeah, well, I think we've got a good full picture there. So I want to end on the crystal ball question, as it were, looking to the future then. What can we expect from Rapid, and what's your plan in this current market situation?
Just thinking of it, it could have been interesting to roll back 2 years ago to our interview and listen to the outcome of the crystal ball then, but COVID hit, so that completely changed the rules. But moving forward with the current market situation that we all see, the market's collapsing, I think Rapid is moving into this era in a very good situation. We are well funded. We've raised significant amounts of money just last year, so we're very well powered to cross this desert, probably a year or two of a desert that is ahead of us in terms of the ability to raise additional funds. We will not have to deal with this. So that gives us some peace and quiet on one hand. On the other hand, there will be more opportunities. The market will consolidate, and this will drive additional acquisition opportunities for us. We've just finalized 2 acquisitions, one of Neat, which is an Hong Kong-based regulated company that we've acquired, and of Valitor, which is a European acquirer and issuer that we've acquired. So looking at the next 6, 9, 12 months, I think there will be significant opportunities for us to to execute on what I would say opportunistic acquisitions, things that are not maybe on our specific radar, but will come across, and we will not be able to say no to good opportunities.
Well, watch this space, safe to say. Sarah, it was great catching up. While we've been sitting here, it's got really busy out there, so I'll let you get back to the event and speak with the rest of the delegates. But thank you very much for sharing your insights.
Okay, thank you, and see you in a year's time.